All opinions and views expressed by the speakers are not representative of views and opinions of RBC Dominion Securities, Inc. All information and opinions provided in this video are in good faith, but without legal responsibility.
Welcome back to Reformed Millennials, the podcast where finances, economic trends, and sports intersect. Cam and Joel help listeners better invest their time and money.
Same as always?
Same as always.
Okay. All right. In 5, 4, 3, 2, 1. Mr. Cam Pitchers, welcome back to the podcast, man.
Just how many month hiatus?
I'm going to call it a parental leave of 12 months.
Yeah. A good sabbatical range, I'd say.
Yeah. It was a long time. I did a few individual pods that kind of scratched an itch to an extent, but I certainly missed it. I know that I had well over 50 people reach out to me over the year asking when it was coming back, which is kind of encouraging, exciting, and it means that at least somebody was listening to us.
Everyone's missing their Taylor Swift takes, so airs to
what a year she had. But I think today is an important day to jump back on and kind of it be the opening pod for the year, a year that has been significantly different than the year that just passed. I mean, 2024 relative to this year is, the average, it felt like we were on top. I mean, the Edmonton Oilers went to Stanley Cup final, ended up losing in Game 7. We had arguably the best 2-year run in the S&P 500 and NASDAQ that we've seen in the last 30 years. Even the TSX participated, being up over 20% last year. Holy smacks, 2024 was great. The beginning of 2025 kind of starts a little choppy, but markets are up. And then it seems as though what Donald Trump was running on and what people perceived him to actually mean by his policy statements were different. And then now we have people starting to take him not just seriously, but literally. Because yesterday we had Liberation Day. April 2nd was the day where he dropped the largest tax hike in American history, where he decided he was going to levy very large tariffs on every country in the world. Not just Canada, not just Mexico, every single country that the United States could potentially do business with and does business with. It didn't matter. The way in which they came to their tariff number was a little bit concerning, but the message was sent. And whether you were a hawk or a dove in terms of how large this tariff hike was going to be, it actually exceeded every expectation. So what do I mean by that? This most recent tax hike, if you were listening to a dove, so somebody who believed that it was more of a nothing burger, the tariff itself was going to be smaller than expected, would have assumed that you'd get a $100 to $150 billion tariff number. When I say that, what that means is that the tariffs themselves are going to generate X amount of revenue, or 150 billion in revenue, tax revenue for the United States. That's how many people were measuring the expected tariff hike on global trade. It came in around $750 billion of estimated tariff on global trade. That was much, much higher than what was previously signaled or believed. So the most hawkish view of where tariffs were going to come in was around 600 billion. Now, if you were to follow the entire timeline of kind of Donald Trump's, he was going to Chicago, rallying in Illinois, talking about the tariffs that he was going to roll out, move all the way through November, December, January, and he kept on talking about it. The numbers always seem to be changing on a week-to-week basis. And what remained true was his seriousness around it. But the large majority of the market, myself included, believed that Trump was going to be similar to his 2016 to 2020 term, where his reaction function was the S&P 500. But what became quite clear based on Treasury Secretary Percent's language, his Stephen Moran, his chief economist, it became clear that the 10-year was actually their most important gauge of success for their policy and what they were saying to kind of influence the market. So on a go-forward basis here, they've gone absolute ham on the tariff front. His chief economist and Secretary of Percent were recommending there be a slow rollout of these things. And then his Commerce Secretary, Lutnick, recommended something more heavy-handed, which is kind of what has played out here. And as a result, we've gotten a 47 VIX this morning, the volatility index spiking. Yes, the NASDAQ at one point was down 19% on the year. The S&P 500 down 12%, close to about 17% down from its all-time highs. There's basically nowhere which you could hide. So it's quite clear that the first 6 months of this administration is different than last. And we, as investors, need to recalibrate what we're paying attention to, how this is going to continue to play out, because it seems as though we need to actually take this man from a literal perspective rather than take him seriously, but not literally. And I think that I'm going to come out guns a-blazing does truly track to his past deals. And I think that moving forward, it's very likely that there's a rollback here, but
Right.
they're not signaling that at the moment.
Yeah, I think
So,
a lot of people would generally think, I mean, master of negotiation, right? And so, or at least his persona as being one, and this being a very heavy-handed way of having this negotiation tool, which is the reliance on the United States, its economy, its financial system, et cetera, on the rest of the world, and kind of holding everyone's feet to the fire in order to be able to get what they want. And I think the general understanding of what it is that they want is maybe the standard deviation on what that is pretty unknown, I would say, just from what I'm seeing and what I'm reading and what I'm talking to you about, et cetera. Like I think you're right in terms of the general sentiment being, oh, this is short-term talk in order to get what it was, even initially with, I guess, the discussions between our countries, or let's call it North America in general, and how there was delays and there was, okay, like we're going to pause this increase for now. But ultimately, and as you said, the seriousness of it has never really stopped. And then it just got opened up, obviously, that the Liberation Day was talked about for a while. And like you said, the most hawkish view at 600 billion, it coming in at an estimated 750. No wonder we've had, like I'm sure your last 2 days or day and a half, the reaction to that over and above number has pushed things into turmoil. And so I think that the reaction to the initial, especially here, I mean, you and I talking with business owners and investors just on the Canadian US side of things, like that's one thing that we can unpack and talk about, and maybe what's top of mind for a lot of people from the advisor side and from the investor side. But the global scale of what was just announced a day and a half ago, that was unforeseen. And so, I mean, if you look at it from that perspective, that's why you can give credence and understanding to the reaction the markets have had for the past 18 hours.
yeah, and no matter where you look, most people are fairly upset with this. I mean, with the exception of Trump's base, who would never waver, and it seems as though the lion's share of the business community is very, to put it like nicely, they're questioning the policy. And what I felt like was the most shocking, and I'm stealing this a little bit from Joe Weisenthal, who I find does a really good job of summarizing. He said in his most recent letter, he said, "I want to start with Nike. As of this current writing, the stock is down 14% pre-market. It ended up going down to something to the tune of 20+% after it's already been down 30% this year, due to the fact that the lion's share of their manufacturing or their production is in Vietnam.
Mm-hmm.
They have something like 1.5 million employees there. If you weren't necessarily paying too much attention to the board that Donald Trump was rolling out, he threw a 50% tariff on production. And as a result of that, it immediately makes every sneaker that Nike sells unprofitable. So the stock got nuked. But what's most interesting about that is if you're going to take into consideration the fact that, sure, there's like $100+ billion deficit, trade deficit on goods between the United States and Vietnam, what this tariff is trying to pull back Nike's manufacturing, bring it back to the United States, or it's trying to incentivize Vietnam to buy $100+ billion in goods. And that's silly from the United States to even that trade imbalance. But it's really silly to assume that people that make 1/50th of what an American makes on an annualized basis to buy services and or goods from the United States. It's just not going to happen. So the message that this sends in many regards, with the exception of a few countries, misses the mark. And what it's suggesting is that it wants Americans to start to produce the goods back home, which I think has been signaled. This is what they're asking for. They want manufacturing. They're taking care of the blue collar worker. They want to lower interest rates. They want to lower the cost of living, and they want to make in America again. And while that's all well and good, it's certainly the duration effect of it's going to take 5 to 10 years to bring back most of this manufacturing capacity back to the United States. A rational actor would assume this is more so a threat to negotiate better deals than it is to actually pull back manufacturing to America. Because if you're really serious about that, it's not possible in your term. And if it's not possible in your 4-year term, it's really certainly not possible in the 2-year period in which you need to regain support to win back the Senate and the House, which, if you look at current polling, he is going to lose in a fantastic fashion. So you kind of come back to all of this and you look at where are we headed next. It still makes sense as investors, as business operators, to, one, obviously be concerned, because the lion's share of CEOs that have been polled, the seminars that I'm watching, the podcasts I'm listening to, the notes that I'm reading, the earnings calls that I'm paying close attention to, you can see based on their commentary that, one, European countries are no longer buying services and or delaying buying services. They're not investing. Consumers are holding back. Everybody is terrified. And while that definitely accomplishes goal number 1 of this administration, which is to get the 10-year yield down, which lowers mortgage rates and allows for the United States to refinance their $36 trillion in debt, or the $9 trillion in debt that's rolling this year at much lower interest rates, while it allows those things, is it worth the assured recession that is going to result if these things stick around for the next 6 months even?
Mm-hmm.
So you really have to start kind of playing out the game theory here, right? And I think there's a worst case scenario, best case scenario, and a mostly bad scenario that I can kind of discuss here. So there's a million outcomes that could occur. I'm trying to set kind of a guardrail between worst and best from what I can tell today. So in a worst case scenario, the administration is serious about keeping these tariffs in place long term. And with that goal is to force everything back to domestic production. No longer is America going to be known for the Mag 7 companies. They're not going to be exporting design. They're not going to be exporting social media. They're not going to be exporting technology. What they're going to export and or design is going to be socks, toasters, and low-end vehicles, whatever. That means higher prices for consumers, rising inflation, which would then hit the average American standard of living quite significantly. It's likely that the entire world goes into a deep recession. In past podcasts, I've talked long about the fact that the United States, when it goes into recession, absolutely everybody else does, because they are the engine that drives the capitalist consumption economy. They usually don't. They might catch a cold if China goes into recession, but I don't know if anyone's been paying attention, but the last 5 years, China's been in a recession. Well, arguably the last 7 years, China's been in a recession, and the United States has been at all-time highs and or compounding at about 12 to 13% in the S&P and the QQQ. That, to me, ends up resulting in a reality where there's not going to be a lot of places to hide here. So slowing growth, rising prices, it's brutal for everybody. Nobody wins. That is the worst case scenario here. And if that does play out, the current multiple, the current stock market price, we are nowhere near a bottom. Now let's go back to the other side. In my estimation, you have a best case scenario here. And this plan from Donald Trump and his administration is a master plan. This is an effort. This most recent rollout of tariffs is an effort to create global uncertainty, bring countries to the table. And I think we're probably going to start to see very quickly, like this weekend, whether or not this is true. It makes a lot of sense why there's been a 7-day period between April 2nd and April 9th between these things actually being implemented. You're going to see better trade terms and concessions on much of what they rolled out. You'll get phone calls, and like very similarly, Vietnam just had a phone call with Donald Trump. Apparently, it's one of the best calls he's ever had. Whatever, where they're going to reduce import tariffs from 35 to 5%. I mean, I don't know why America even cares about that, but nonetheless, that is a concession. As a result of that, this all happens very quickly, like within 3 to 6 months. You could see interest rates drop. We already did. We got a 4 handle on the 10-year. When Donald Trump took office, it was like 4.95. That's quite significant. I mean, for those that are going to renew their mortgage right now, if you're looking at the 5-year yields on the Canadian side, we're in the mid threes. It's most mortgage rates now on a 5-year fixed are in the threes. That is, for those that are debt strapped, a positive thing, right? However, it's of my opinion that without the stock market being in a mood in which animal spirits are positive, it's very difficult to see an economy do well, because reinvestment is much easier when you're optimistic. Pessimism just begets more pessimism. It's a flywheel effect in both directions. So we see a resolution to these tariffs. You get rates that drop. A recession is avoided. You see improved trade deals that ultimately benefit the U.S. consumer and the U.S. business. And in that case, the short-term pain leads to a longer-term booming market that Donald Trump has been saying is likely to happen. As early as today, he said, look, I mean, oil prices were down 9% at one point today. Interest rates on the 10-year are down below 4%. He's calling for Chair Powell to cut rates. Powell responds in a presser where he says, we're going to hold tight, but we're ready when needed. And this master plan, you really need to have a belief that you're like, you know what, I'm going to believe in American capitalism, the incentive structure that is in place here. And holy mackerel, is he really going to cut off both of his arms and both of his legs and cut off his nose to spite his face? That is the best case scenario. Now, the one in the middle that is still a bad one, by the way. is the intent of the negotiation is to continue. That was a master plan, but it doesn't play out.
Yeah.
And this isn't a 3-month, 6-month thing. It is now a 9, 12, 18-month thing. And even if this is successful in regards to negotiating better deals, the collateral damage of all of this sends the United States into recession and therefore the rest of the world into a recession. And supply chains are disrupted. Companies are not investing. You have consumer confidence that is completely eroded. There's no deals being done. M&A dries up. There's no IPOs. Infrastructure is not being built. And the United States ends up having to print more money in order to pull them out of a recession. That is
seems to work out every time.
Medium term. So their intent to throw these tariffs on to generate more revenue ends up backfiring, and they end up having to print more money, which would then send them into more debt as a nation and effectively redo 2020 all over again. And the market usually benefits from this because when you print money, it tends to benefit the larger corporation. Interest rates come down, people take risk, and we go through the whole cycle again. But again, it negates what he's trying to accomplish.
Yeah.
So it doesn't make sense. So you play it out, and you come to this conclusion where, and I still believe this to be true, where you're closing your eyes, hitting the buy button because, you know what, all the incentives push us, and every rational actor in the world wants what's best. And if we're all in agreement with what is best, then our best case scenario is the goal. And you would assume that the rest of the world doesn't all gang up on the United States. But right now, the market is quite clearly signaling that, hey, homie, I don't know about that. It seems like, holy mackerel, Europe is very open to having conversations with China right now.
Mm-hmm.
It has been since the Mongol invasion, since South Korea, Japan, and China got along. Like, why are they now teaming up to combat the United States? So from my point of view, it seems like a lot of this has been a very rash rollout. It didn't seem like the cooler, more higher educated, better educated heads prevailed here. Scott Bessent and Stephen Moran very clearly lost on their negotiation. And Howard Lutnick and his heavy-handed iron fist is leading here. Now, we'll see how this weekend plays out. We'll see how the deals start to roll in. Once you get a couple big ones done, I think it is quite likely that more follow. Mm-hmm. And because that ends up giving more leverage back to the United States. However, if you look at Canada specifically, the incentive currently is for the Liberal government to act really tough on trade and to not rush to the table to do a deal.
Yes. Because
politically, that benefits them. The same could probably be said for a number of European countries. However, on south of the border, Mexico, I think they're very open to getting something done quickly. When you look at China, they have an approach of 20 plus years, and this all benefits them, their long-term plan. I'll post in the newsletter some really good reading on why most of this is a boon to the Chinese economy, to their strategy, and the reshoring of confidence inside of their country. More deals with Europe just expands their influence and hurts the United States. So it would really be materially beneficial if we could get more deals done quicker for the best case scenario to play out. The longer this goes on, the worst case scenario plays out, right? So, or the mostly bad scenario that I had talked about. And what I want to kind of touch on last before moving on is the long view on Twitter. I refuse to go to X, so that's the way it's staying forever. Had an interesting kind of, just take a deep breath. If you reread Stephen Moran's paper, if you believe that rational heads prevail, this is how it's going to finish. And I agree with him, which is why I think that it's going to be the result is going to be something in between mostly bad and pretty darn good. And it reads like this. I'm going to change it up a bit because this is a podcast. Donald Trump likes the attention. He's boisterous. He's effectively acting the way that he always has. However, people pretend that he's serious. While I think that this portion of his tweet is wrong, it seems very clear to me that the basic plan is to raise tariffs by 3 to 6% across the board, and likely a little bit higher on China. This results at these numbers in $100 to $200 billion a year in corporate tax. In tax revenue. This is a tax on the consumer, but that tax revenue is generated. This goes to offset his corporate tax cuts that he made during his first term. In addition to the tip tax cut that he's going to also initiate. This is all a part of the Becent 333 plan. So the U.S. tariffs ex-China that came through recently were a little bit above the average signal. However, a rollback to that makes a little bit of sense here. Every 1% that they raise on the $3 trillion in imports is an additional $30 billion in the pockets of the U.S. Treasury, or in terms of tax revenue. If you do it on $2 trillion and eliminate Canada and Mexico, which I actually think is likely to happen, we're 1/3 of trade with the United States. This produces that $100 to $200 billion that he needs. And while he's doing a lot of damage to trust and to relationships that have long been important to the American exceptionalism, you can see the path forward in his words. I think that this benefit and a few concessions here would result in an American people that are happy. So, long-winded way of saying that if you believe that this is the end of the line for American exceptionalism, if you think that this is going to be the end or the demise of the American hegemony, and the market's going down further. Absolutely. However, if you are of the opinion that one man's words is not likely going to represent 340 million people, and that cooler heads prevail, and something more in the middle occurs over the next I'd call it a month to 3 months, then we're pretty close to pricing a lot of this in. So historically, when you look at a 47 or 36 to 47 VIX, this is a very, very good time to be buying. I'm not saying you should. I'm just suggesting that historically, the data shows that when you buy at this price, if all things remain the same and we resume and eliminate the uncertainty in the market, it's likely that prices go up from here. Now, who knows? Like I said, if the worst case scenario happens, it definitely could go the other way. So I think that largely covers most of this.
Okay. That was a heck of a monologue. We'll insert some applause here for that. I think that was a great, we've been away from the pod for a long time here, and parts of it, maybe there wasn't as much action going on, but like you had said, to kind of kick things off, I think the start of 2025 has been quite uncertain to a degree, and lots of sentiment going one way or the other, depending on the day, which again does take us back to that 2016 through 2020 time period a little bit. But ultimately, breaking it down and understanding that, I typically like to think that something's going to land in the middle in most cases. I think we live in a world of extremes for the most part on expectations and what something might mean. And so keeping our eyes on these things, I think it's really interesting perspective. I don't necessarily know if you need to go into it anymore, but thinking about the targets, he talks about looking at the 10-year versus, maybe something a bit more near term. I think that's a very interesting perspective and understanding to have as what the goals might be or what the prospects might be going forward. And yeah, I guess I can't agree with you more. I'm not doing great from a debate standpoint here, but I think I do agree with you. The next, week to 4 weeks realistically will be very interesting to see how many people's or how many countries' will gets bent, because ultimately I think that's what we're looking at, and that's what the Trump administration is looking at. And when he went up there with the craft beer list of tariffs the other day on his presentation, I think there's a lot of shock and awe with that, but you're probably right. There's probably 5 or 6 within that list that they're most concerned about and want to get off the plate. And then you could see some serious rollbacks in other areas.
Mm-hmm. Yeah. So, I mean, I really enjoy pulling from different parts of the market in regards to kind of where they participate. So I like to follow hedge fund managers that have a view on markets that kind of speak to their portfolio a little bit, but also kind of the way in which they're plugged into the current administration or their current country. And it's quite clear that there's concern over what's going on. And nobody really knows, which is surprising to me in many regards. The only person that seems to have any sort of insight into where things are headed from here is like Chamath Palihapitiya, and he just loves to be boisterous. And if there's one thing that's been true, that man's been wrong significantly more than he's ever been right. So will he?
Usually whoever's loudest in the room, though, who gets listened.
He is always, and every time he calls himself the next Buffett, it's the perfect time to sell everything. So we'll see how this all plays out. But yeah, I'm definitely. I mean, this week, the last 3 weeks actually has been not awesome. Definitely makes me not love my job as much as I did in 2024. I can tell you that. But it's much. In every other instance, if you go back 10, 20, 30 years, cooler heads prevail. It's very likely that in 3-6 months, we'll be worrying about something completely different.
If history repeats itself from that perspective, then I would 100% agree with you. Usually it was, I think maybe we were living, call it half a decade plus ago, we were living on day-to-day headlines. I think now maybe it's not so much day-to-day, maybe a little bit more longer term, but the news cycle and what people are really worried about tends to flip over a lot faster than it ever did before. And so I would tend to have the sentiment that something material will change in regards to what was announced on April 2nd before even April 9th, and potentially obviously within the next 3 to 6 months as well. Because I think there's a lot of talk about, I mean, if you turn on the news, I think on the bottom left corner when they're have their kind of headline, it's trade war, right? Trade war is the term that's being used. That's what it could turn out to be very quickly. But for right now, I think there's more signs pointing towards this being a very extreme, albeit, but negotiation tactic to get a few specific things done very quickly that they want to get done quickly, that maybe they wouldn't be able to do in another. They don't think they'd be able to do in another fashion. I don't think necessarily this is the right way of doing it, but we know the tactics that have been used before. I'll leave it at that.
Yeah, we've seen this show in many respects happen before. So whether or not this continues,
you know what though, it's not isolated just to. I mean, we like to talk about the United States and I guess even just the news cycle from that perspective. But the same thing's been happening in Canada to a degree from our government's announcements perspectives. Like, I won't necessarily go into too too deep with it, but most recently in the last year, there's been a number of them year over year, but in the last year, the announcement of the capital gain inclusion rate increase and this the snap to reaction to that, which was required of, you would have been picking up phone calls, I would have been picking up phone calls, making phone calls with clients, investors, et cetera, on what to do with the reaction to that change that was implemented very quickly on we'll call it draft basis, but every single announcement was that this is going through, this is going through, this is going through, and a bunch of decisions are made. And then we come to, obviously, maybe we couldn't project the tumultuous 6 to 9 months that happened in the Liberal government that then led to the leadership change, which then led to the announcement of this specific piece of tax policy being repealed. But I guess just the shock and awe factor, or the major decision-making, negotiation tactic, policy change items that are thrown out these days with little to no thought of the long-term and or sometimes the short-term effect of some of those decisions, makes it really hard to have a lot of confidence sometimes in some of these announcements. So I think that even plays into some of the sentiment with this tariff talk, is like, well, they said this, but are they actually going to do it? Because there's so much evidence saying that something will get repealed back based off of, whether it be our experiences here with our government or with the US government as well. And so I think that does feed into sentiment as well. Can create some apathy, I think, at times, or it can create a bunch of fear with certain people, which is, another cause and effect.
Mm-hmm. Yeah. So, I mean, you kind of hold on to your butts. I'm not excited for the weekend. I'm just going to be doom scrolling. So maybe I'm going to have to get one of those cages for my phone and my laptop, and I'll open it Sunday night and see where we're at.
See how many opinions have changed 360 each way.
Certainly. Yeah. So we'll take a breather and go from there. Cam, middle of tax season.
Mm-hmm.
What are you seeing? How fun has that been for you so
far?
Yeah,
well, I guess I don't want to bore people here with more tax talk, but I think it's been a bit of with some of the things that I just announced. I think with some of the governmental change and we'll call it the pause in government for a while too, which obviously affects the, legislative assembly and whatnot through what they do in a day-to-day, but it also affects all of the underlying systems of the government at the same time. And so there's been some extreme delays on, and also as a result of some deferrals that were given too. So this was not all, but some of it, a majority of it was as a result of this capital gain inclusion rate change or announcement change and then repeal, was that, big investment houses, for example, weren't sure how to report certain kinds of income that was being earned during the year and how that should be presented to taxpayers when they are getting I'll call it their slips at the end of the year. There was obviously on our side of things from the processing of, filing employment slips for companies or dividend slips or trust returns, et cetera. There was a lot of uncertainty. And then as a result of that uncertainty, there were some deferrals put in to the filing of some of that stuff. And that has just caused an administrative backlog from the perspective of the CRA and what's available in terms of information sharing between, because we have a heavy reliance. I mean, at this point with the taxpayers and CRA and then the position that we're in, we do have a heavy reliance on the ability for that information sharing being very transparent and very timely. And so that has caused, I would say, in addition to any like policy related stuff, just in terms of getting like production and getting workflow completed, it's created a lot of backlogs and delays right now. So I know we're not alone in our office in terms of really having to, I've been doing this for close to 12 years now. Like some of the procedures that we kind of got rid of because they were very manual, we've had to go back to. And as a result of some of this information sharing not being available. So I'm sure you're getting an uptick in annoying emails from accountants asking for certain things. I know our clients as well are receiving, like, typically, again, they can send stuff in and say, hey, can you just pull this stuff from CRA, or can you download this information from CRA, because they should have all of my information based off of historical years, and then what's happened this year. But right now we can't, and there's a lot of uncertainty with it, which then leads to more stresses with, okay, well, I have this slip that I know I have, but I don't know where it is, and it hasn't been received yet, and I need to file my tax return by this date because I'm applying for a mortgage and I need my notice of assessment. So it just creates I guess I'm not sure. The takeaway here is just, if you've been waiting on getting your stuff in, I would get it in as soon as possible, just because there has been some more production delays, and that creates, at the end of the day, with a deadline of April 30th, there's X number of things to do before that deadline. So every day that passes by, it's just more stuff to do on the next day. So it's top of mind for us right now, just to try and get as much done as quickly as possible. And if you're a listener out there and you haven't gotten you wait till Easter to send your stuff in, sometimes that's a common timeline for people to say, I got to get my tax stuff done. You might want to think about doing it a bit earlier this year.
Ugh. Is that a hint? I feel like it's just uncertainty everywhere.
Well, and it's the lateness of announcements too, right? Like, so, a lot of people would project, because there's been deferrals and filing deadlines with other things, that they're going to extend a deadline for personal income tax as well. From a filing perspective, I'm sure if you owe money, they want their money by April 30th still, but from a true filing perspective, they might provide some kind of deferral. But at the end of the day, it's like, when I hear that kind of stuff, I hate it. Because it's just, all that does is prolong it. It eats into, we all have jobs where we move on to the next thing. And so when you provide a deferral or a reason to be able to file later, obviously there are certain circumstances where it makes the most sense to do that, but it just creates actually more of a backlog into the future, because you're like, well, I would normally be working on this, but now I can't. And so, I wouldn't be surprised if we hear something in the near term here on some kind of extension, but number one, it usually happens way too late. So it's going to be like April 20th that it gets announced for April 30th deadline extension, or it could be even the 11th hour. So obviously, I would say most people in my position are operating under the assumption that there is not going to be any change, because that's the assumption we have to operate within. But yeah, we'll see. Just, again, more the uncertainty of things like this, that you would think that there should never be any uncertainty on anymore, given the day and age that we live in, it still exists.
It's crazy. And you know what? We have seasonality in markets. It often aligns with political changes. And we have this saying in markets where it doesn't matter who's in office, and the market sort of tends to ignore it. The economy tends to ignore who's in office. We ascribe way too much credit to politics with the results in which occur. And I think in the last 5 years, that couldn't be less true. From government lockdowns and the way in which the money printing has impacted the economy in many respects, if you take into consideration the vast changes to tax code in Canada and less so in the United States, and how that affects people's business operations, the supports that government provided, and how that changed the way people acted, and how you filed, reported. And then you have a polarization of party where you end up getting a lot of differences in terms of what to expect in the future, dependent on who wins.
Mm-hmm.
All of this has contributed to a seasonality effect that has been significantly more influenced by government than has been the case probably for 25 years. And it's something new. It feels as though there's a paradigm shift occurring. It's shocking that we've gone an entire 45 minutes without even mentioning AI, in a time in which I think more people are using it more frequently than ever. yeah, memes, whatever. It doesn't actually matter, right? Like it's funny. There's this Chris Dixon article from 2011 where he discusses all great tech innovation presents as a joke or a game initially,
Yeah.
and then in the future it becomes something that you use on a day-to-day basis. And I think that that's obviously quite true. I mean, the Trump administration used ChatGPT to write their trade tariff policy. So it's kind of shocking that we've gone this long without even discussing that because of the impact of government and decisions made by our voted officials. So we have a Canadian election coming up. Get out and vote. So
yeah, what is it? What's the date again? April,
I think 28th, no?
Yeah, just before tax.
Something like that.
Perfect. Yeah.
Perfect timing. Well, you actually can get out and you can early vote if you wanted to.
Early vote. Yeah, absolutely. Yeah.
Yeah. So
yeah, I'm sure that's actually not even on a lot of people's mind, unfortunately. I mean,
not right now.
The timing of calling an election, we don't need to get into the strategy there because we all know what that's about. It was done for a specific reason to call it on the day that they did and how fast they did it. And kudos to them. That's just good strategy at the end of the day. If it works out for them, obviously they made that decision. They think that's going to work best for them. But timing it with everything else that's going on, it's probably, if you're talking about top 5 news stories that you're clicking through in the mornings, potentially, it's the Canadian election is not going to be 1 or 2. I'll put it that way.
Ain't going to register.
Yeah.
No, I'm seeing helicopters land on golf course lawns, and we got speeches from prime minister candidates that are being ignored to watch a guy walk to a dinner for a live golf event. Nobody even watches live golf.
Yeah,
we watched the president land there though.
Yeah,
absolute lightning rod. But Cam, we're shaking the cobwebs off a little bit here. It's nice to be back. What an incredible first 3 months of the year. I'm very excited and actually a little bit. It feels like spring's here. 15 degrees this weekend. Holy mackerel! I hope we've seen a bottom today, April 3rd, 2025, and we're just going to go on a optimistic productivity, fantastic markets, great family time, good weather heading into the summer. That's what I'm hopeful for.
Hey, buddy, I love that sentiment, and I love the optimism. We all know that there'll be bumps in the road still, but having that outlook is good and a good way to close off. Technically, I guess winter ended back on March 21st, but we know here in Edmonton that winter never ends, and realistically until May log. But we're going to use April 3rd as our jump off point this year, and a bottom for the economy and a bottom for our winter fears.
Yeah. Next podcast episode, I want to talk a little bit about. I've produced a little bit of notes for it already for us, but I want to talk about like the difference and fracturing of Gen Z and not just the millennials, but the boomers, the big difference, and the way in which we're seeing them interact with work and workforce, with millennials specifically, and how they react with the actual economy, their consumption habits, all those sorts of things. So that's going to be the next election, the next podcast. And at least I think if you're going into this weekend, if you can remember one thing, pessimists sound smart and optimists make money, baby.
There you go. That's a good way to end it. Glad to be back, buddy.
All right. Get back to filing, sir. And I'll see you Saturday morning.
There we go.
Take care.
Also, it's important for listeners to understand that investing in equities, fixed income instruments, and/or alternative asset classes involves substantial risk of loss. Any action you may take as a result of the information presented in this podcast is your own responsibility. The information in this podcast is presented as a general educational, informational, and entertainment resource only. While Joel is registered to provide investment advice, this podcast does not provide individualized investment, tax, or insurance advice, nor is it meant as a recommendation to any listener to buy or sell any specific securities or otherwise take any other form of investment action. This is an excerpt of the full legal disclaimer that's available on the landing page of this podcast, which includes whether Cam Pitchers or Joel Shackleton have any ownership or interest in the specific securities discussed in this podcast.